What's going on? Welcome back to the channel. So DraftKings recently did drop their earnings. I want to go over some of the absolute key highlights that you need to kind of take away from that. Aside from that, go over some of the data points, what analysts are saying, and everything else. But first, make sure to hit that thumbs up. And with that, let's get right to it. So DraftKings did close at $53.49, went up a very impressive 15.16% based on these results. So earnings per share did beat by 10 cents. Revenue did miss by 1.31 million. So nothing overly crazy. I'm going to go over future guidance near the end of the video, but the implied move going into this earnings was 8.34%. So a little bit more volatile than what was anticipated, but nonetheless, I think it resulted in it being very positive. And I think there was just a lot of high expectations for this earnings, because you can kind of see there was a nice run leading into the earnings from 2 weeks ago. So it went up 8.71% 2 weeks prior. Aside from that, though, looking at shorts, I'll give you a quick overview of what they did and everything else. So that is Coinbase, don't need that. So DraftKings, ultimately shorts did return 103,000 shares. 4.47% of the free float is being shorted. Works out to be 21.41 million shares overall are being shorted. And so as you can kind of see, shorts did return a little bit leading into their earnings, so insinuating that even they did see a little bit more upside coming from their earnings. So again, kind of a good thing. Aside from that, though, looking at options, 61 million in calls, 6.58 in puts. 51% of all the options being done were optimistic in nature, and of the call options that were purchased, you see a consensus for it to be roughly around that $55 to $60 range, and then the bears are anticipating for it to be sub 49. So still a lot more upside is anticipated based on kind of where it landed. And so like I said, with it at 53 and change, it is trading between this R3 and this R2. So going into next week, just watch for 51.47 to be the next strong support, followed by 46.55. I don't see that being touched anytime soon unless there is large macro events that prompts that, but I think based on their earnings, there's going to be a lot more upside. So potentially $59.45 is going to be that next strong target / resistance point. Moving over to here, so you can kind of see the recent analyst ratings that did come out, quite a lot in fact. So you have looks like 57, 60, 51, 61, all over the place, 49 also, but you do also at the same time have the highest rating so far, and that is $62. Mizuho Benjamin, who has a 57% success rating. As a consensus of all the ratings though, $53.47 is that target, and that's actually representing a negative 0.04 downside. So nothing really crazy. I think a lot of innovative companies always struggle with this, have some analysts not the most optimistic giving 49, and then you also have some that are very bullish giving 62. So again, something to kind of keep in mind. On a side note though, if you do want all this information to be completely free, which I recommend a lot of people to kind of take advantage of, sign up for IBKR, link in the description below and also the comments. If you want ownership, analyst forecast for upcoming earnings, ratings, everything under the sun, definitely very advantageous. But aside from that though, getting right to their future guidance and the absolute key highlights from their earnings that everyone needs to be aware of, make sure you guys stay tuned for this. And with all that, appreciate all of you watching.
DraftKings targets 32%, 38% revenue growth in 2025 with focus on live betting expansion. Earnings Call Insights DraftKings Inc. DK Q4 2024 Management View. Jason Robins, CEO, highlighted a strong 2024 with a 30% year-over-year revenue growth to $4.8 billion and adjusted EBITDA improvement of $332 million to $181 million. He noted the company achieved positive free cash flow for the first time and acquired 3.5 million new customers, increasing its total customer base by 42% to 10.1 million. Robbins emphasized 2025 priorities, including a focus on extending leadership in live betting through acquisitions of Simplebet, Sports IQ Analytics, and Mustard Golf. These technologies aim to enhance the live betting experience. the company is exploring opportunities to optimize its capital structure and deploy significant free cash flow to maximize shareholder returns, including exploring debt markets and prioritizing returns to shareholders. CFO Alan Ellingson reported Q4 2024 revenue of $1.393 billion, reflecting 13% year-over-year growth, and adjusted EBITDA of $89 million. He highlighted strong customer acquisition trends and improvements in structural sportsbook hold percentage, which increased 80 basis points year-over-year to 11.2%. Outlook: DraftKings raised its fiscal year 2025 revenue guidance to $6.3 billion, $6.6 billion, representing 32%, 38% year-over-year growth. Adjusted EBITDA guidance remains at $900 million, $1 billion. Management expects adjusted gross margins to range from 46% minus 47%, with stock-based compensation to represent approximately 6% of revenue. Free cash flow is projected at $850 million for fiscal year 2025. Ellingson noted the positive performance in January and early February 2025, supported by a strong sportsbook hold percentage and successful customer acquisition during major events like the Super Bowl. Financial results: DraftKings reported $1.393 billion in Q4 2024 revenue, a 13% year-over-year increase, alongside adjusted EBITDA of $89 million. Structural sportsbook hold percentage improved to 11.2%, driven by an enhanced NFL parlay handle mix. Promotional reinvestment outperformed expectations, and adjusted gross margins reached 45%, reflecting optimized promotional offers and improved hold percentages. The Mega Millions jackpot in December contributed to strong customer acquisition in the digital lottery courier vertical. Q&A. Sean Kelly, Bank of America, asked about handle growth and its potential re-acceleration in 2025. Jason Robbins explained that recent distractions, including the election, impacted Q4 trends. But early 2025 data shows acceleration in handle growth. Stephen Grambling, Morgan Stanley, inquired about promotional intensity and its impact on margins. Robbins noted a meaningful decline in promotional intensity is expected for 2025, which aligns with the company's broader cost efficiency efforts. Robin Farley, UBS, questioned the impact of live betting investments on EBITDA. Robbins stated these investments are expected to be EBITDA neutral in 2025 and EBITDA positive by 2026. Brant Montour, Barclays, asked about the path to higher structural hold percentages. Robbins attributed improvements to mix shifts and product enhancements, emphasizing continued upside opportunities. Sentiment analysis: analysts displayed cautious optimism, focusing on customer acquisition trends, promotional efficiencies, and structural hold improvements. Concerns centered on balancing investments in live betting with EBITDA targets. Management maintained a confident tone in prepared remarks, emphasizing growth opportunities in live betting and emerging verticals. During Q&A, they acknowledged potential risks, but highlighted strategic initiatives for sustained growth. Compared to the previous quarter, analysts appeared more focused on promotional intensity and its alignment with financial targets, while management's tone reflected consistent confidence in achieving guidance. Quarter-over-quarter comparison. Revenue guidance for 2025 was raised compared to Q3 2024 projections, with an increased focus on live betting investments. Adjusted EBITDA guidance remained consistent at $900 million to $1 billion. Management's tone remained confident, supported by early 2025 performance metrics. Analysts shifted focus toward understanding the long-term impact of promotional strategies and customer acquisition dynamics. Structural hold percentages and gross margin expectations showed incremental improvement, reflecting continued optimization efforts. Risks and concerns. Management highlighted regulatory uncertainties in emerging markets and potential risks associated with promotional intensity adjustments. Analysts raised questions about the scalability of live betting and its impact on EBITDA, while also expressing concerns about competitive pressures in iGaming and promotional environments. Final takeaway: DraftKings reported strong Q4 2024 results and outlined an ambitious 2025 strategy, targeting 32%, many 38% revenue growth driven by live betting expansion and enhanced product offerings. The company emphasized disciplined promotional intensity, improving structural hold percentages, and leveraging acquisitions to enhance its competitive positioning. While analysts acknowledged these growth drivers, questions about promotional efficiency and regulatory challenges highlighted potential risks.